Welcome back. Now, a tough economic environment characterized by high interest rates has weighed on the property sector. Redefine, one of the counters feeling the pain during the interim period. The landlord recorded a flat dividend down a tepid 0.2% to 20.27 cents. And joining me now is the company's CFO Ntobeko Nyawo. Thank you so much for your time, Ntobeko. Of course, as we have seen with the sector, some pressure points. But let's actually start off with the growth that you saw in this period, particularly zooming in on organic and inorganic growth, the drivers there.
Okay. Thank you for having me, Zanati. I think you're quite right. Our business, if you look, let's start with the South African portfolio.
Yeah.
Solid organic growth on a like-for-like basis of 3.5%. That is really good trading. We've done some good deals in terms of leasing. And also, we've seen very high occupancy in our South African portfolio in the deep 90s. So that is what is driving the organic growth in South Africa. Similarly, in our Poland business, which is in EPP retail, we've seen also very good trading stats coming out of that business. All of those supporting a like-for-like 4.4% organic growth out of that business. You know, the vacancies are very low, 1.6%. So if you really then look at the results, these are positive operational metrics that are playing out in our distributable income that grow by 6.1% in this period to 1.7 billion rand if you compare it to the 1.6 billion rand in the prior period.
Yeah, well, let's actually zoom into the South Africa portfolio because, of course, we know that the backdrop, the economic backdrop that you are operating under, it seems that all of the portfolios are on the right track. And, of course, one that we always like to zoom into there is office. I have seen that there have been some improvements there, but still some pressure points. Would you still say that things there are still a little bit shaky?
Yeah, I think the office portfolio will always be challenged because the net oversupply position is largely going to be dependent on what happens to the economy in South Africa. And you know the economy is a bit challenged in this environment. But what is pleasing for our portfolio at Redefine is that really and you see the trading out of our office portfolio is quite pleasing in this period because vacancies are low at about 12%. And the reason for it is that 95% of our office portfolio in South Africa is high quality in A and P grade offices. So our active investment philosophy is playing through in terms of how we allocate capital to high quality offices that are well located, and that is actually what makes our office quite defensive in a tough environment if you compare it to what is happening in the sector.
Well, actually, I mean, also earlier on, we did touch on some of the inorganic growth that also drove the improvement in your financial metrics. Talk to us about that asset recycling program and what the focus is on in terms of property expansion.
So we are an active asset manager in terms of our investment philosophy. So you will see now and again we'll do transactions. And those transactions are really steered towards our growth trajectory. So in South Africa, I think we really saw a nice acquisition of 1.8 billion rand of Mall of the South, which is a quite attractive asset for us. We've had that asset for 3 years, working with it, and now having the opportunity to acquire it actually at a very attractive yield of 8.5%. That's where you then see the inorganic growth that came through that acquisition. I think just as a point there further is that given the fact that we're an active asset manager and we've got, if you look at our balance sheet, the LTV is a little bit constrained, sitting at 42.6. It's outside of our comfort levels.
Yeah.
We would like to bring that down. So what we do then, when we recycle assets, we actually recycle capital out of non-core assets. Like you saw in the period that we're in now, we disposed 311 million rand of properties that are non-core in South Africa. Then we take those recycled proceeds to reduce gearing or also to fund expansions of the things that we're doing. And I think one transaction, which is also very exciting in terms of our retail portfolio, because it's increasing our township exposure in terms of retail. We acquired PET, which is very, very exciting exposure for us as we continue to recycle assets and fund exciting expansions like those.
Well, talking about that LTV, talk to us about how the higher interest rate environment, talk to us about what the impact of that is looking like right now for the group.
So you will really see it in our interest cover ratio, which has reduced in the period from 2.4 times to 2.2 times. But I think if you look at it in context, is that we believe we're at the peak of interest rates. So it does tell you that the underlying quality of our properties, as well as its cash generation ability, is able to sustain us, because that's what is producing the cash for us to cover the debt. And we are quite pleased with that. And we like the rest of the industry, really hoping that the higher for longer will actually, at some later parts of 2024 or early 25, inflation can cool off globally, and we start seeing the relief, both in terms of the ICR pressures, as well as the fundamentals in the valuations of properties, because those will come down those will actually improve as interest rates come down.
All right. I do also understand that there is a restructuring that you were doing in terms of your properties that are occupied by government tenants. What does that look like?
So look, that is part of our active asset management strategy, where we actually took about 11 properties that were actually government tenanted offices, and we joint ventured with Talis. We announced that transaction to the market, and what has happened in that asset, it actually has traded very well. Post the restructure, we've actually we've seen a very good increase in terms of the unexpired lease term, increasing to 4.9 years in that, which basically means that we've been able to renew and get longer term leases. So our strategy in that portfolio has actually paid off very well, because you will those assets are now actually in a better trading condition because they are getting longer term leases.
All right. Well, we do have to close off the conversation there. Ntobeko, thank you so much for your time and giving us insights on those numbers that came out of Redefine. That was CFO of Redefine, Ntobeko Nyawo.